At eClerx, buyback takes the driver's seat and expansion is put on the back burner. A leading KPO player into business process management, data analytics and automation. A small cap company with attractive PE multiple and shareholding support both from promoters, FPIs and mutual funds. Of the three business segments, digital is the high-tech segment, contributing equally with financial markets. Customer operations ranks third. On the performance front, eClerx has delivered impressive figures both in terms of revenue and profitability. On a trailing 12 months basis, over 4 years, revenue reported good growth. Similar has been the performance by profit during the period. Profit after tax percentage moved up and there has been a small fall during the recent 12 months, but even then it appears at a higher level as compared to the earlier 2 years. A similar trajectory prevails in respect of EBITDA percentage in spite of a small fall as compared to the figure of 2021. eClerx is in news for its multiple buybacks during the recent years. Unique features of cash flow, fixed assets around 10 to 15% of the operational cash flow, major outgo regularly on buyback and a very strong operational surplus year after year. Even for the 6 months of FY23, operational surplus has been quite significant. And in February 2023, the company has carried out one more buyback of around 300 crores. Very impressive return on capital employed, ably supported by rising profits and rationalized capital employed. Over last 6 years, company's capital employed has been quite rationalized through buybacks. Profitability, earnings before interest and tax, has been just moving up. Result is a very effective return on capital employed, rising more particularly from FY21 and moving up in the subsequent year and reaching another high during the last 12 months. In terms of price earning multiple, eClerx has been trading at a very significant discount to its peers. eClerx has an edge as its PE multiple appears at the bottom, the recent being 14.7, closer to the level of FY21. First Source almost moves along, Coforge is at a level quite high, and middle path is treaded by Emphasis, Advantage, eClerx. In terms of revenue geography, North America is quite predominant and forceful. During the last 2 years, North American share in the total revenue has gone up sizably, but during the period, Europe has suffered a fall and we observe a sizable growth in rest of the world revenues. And when it comes to revenue growth during the last 12 months, it is impressive 21% for North America. Europe significantly low as compared to US, and rest of world has reported very impressive growth. Of its total revenue, almost 60% comes from top 10 clients. During last 12 months, the top 5 clients have moved downwards by about 5% share, while top 6 to 10 during the same period have moved up by about 3.5%. It's positive for the company, and other clients have shown moderate growth, adding to the stability of the mix. During the last 12 months, the revenue growth reported by top 5 is a minimum 8%, while it has been substantial 42% in respect of 6 to 10, a real shift, and other clients have also registered significant growth. For a stable mix, this is a welcome sign. Among the reasons for the slump in EBITDA are two major factors: increase in employee benefits and subcontract costs rising up. During last 12 months, there has been changes in cost elements, more particularly employee expenses, which have gone up almost 1.5% during last 12 months, and during the same time there has been an increase of 1.4% in respect of subcontract charges. Both these, accompanied by a small increase in other expenses, have contributed to the fall in EBITDA by almost 3%. And the major contributors are employee costs and subcontract charges to a large extent. The movement on daily chart has a bearish momentum, with the price appearing below short, medium and long-term moving averages. It was In January 2023, the share price decisively crossed above all averages, and thereafterwards the upward move continued till 7th of February, and the downward slide started therefrom, and the price moved across all averages in the month of March, taking the share price into the bearish zone. And in the recent week, although there has been a move to cross over above 20 EMA, there has been stiff resistance and the price is just along 20 EMA for the time being. For quite some time, price of eClerx has been moving within a narrow range between 1600 and 1200, and we find triangular shapes taking form at regular intervals, and the first significant triangle of the type is between June 2022 and December 2022, and we can also infer a similar triangle of a smaller scale emerging thereafterwards with its peak in February 23 and now closer to the base. That might be quite suggestive of a positive movement in the near future. In favor of eClerx, a small cap, significant KPO, growth in both profit and revenue, return on capital employed supported by buyback, strong cash flow, and a price earning multiple quite attractive compared to peers, but over dependence on US market and dominance by top 10, going for buyback instead of more expansion, and movement of price in a narrow range are major negatives. Hope you found this video on eClerx interesting and useful. I am Vittal Prabhu with a weekly video on Stock Learning Simplified. You can access similar videos with rich content at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.